policymakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. India has conducted military strikes deep inside Pakistani territory, hitting what it describes as terrorist camps. It says the strikes were in retaliation for a militant attack in Karachi last month, in which 26 people were killed, but Pakistan has described it as an act of war.
This has been initiated by India. If India is ready to back down, they have taken the initiative. We have just responded. We have been saying all along in the last fortnight that we'll never initiate anything hostile towards India. But if we are attacked, we'll respond. If India backs down, we will definitely wrap up these things, But as long we are under attack, under fire, we have to respond. We have to defend ourselves.
These actions were measured, non-escalatory, proportionate, and responsible. They focused on dismantling the terrorist infrastructure and disabling terrorists likely to be sent across to India.
Well, Bloomberg's Pakistan Bureau Chief, Fuzzy Munk, joins us now. Fuzzy, thank you for joining us. What has been the major developments in the last couple of hours?
Thank you, Francine. So what we've seen in the past few hours, you played a clip of the Indian official as well. Both sides, Pakistan's military spokesman and the Indian Foreign Secretary have come out and they have given some details about what happened during the night. And India has said that they have hit, terror outfit infrastructure. Pakistan denies that and says that 26 civilians have been killed. India doesn't comment on what Pakistan said was that they have shot down 5 fighter jets, 5 planes, including 1 Rafale. And India didn't talk about that in their press conference or briefing. Right now, there are 2 very important meetings going on. Prime Minister Narendra Modi in India and Prime Minister Shehbaz Sharif in Pakistan are both chairing what we would say is, a cabinet security meetings. And possibly, we are expecting for some statements to come out. Prime Minister Sharif is expected to give us a speech to the nation and address the nation once that meeting is over.
Yeah. Fuzzy, will the conflict escalate further?
The other big sum up from the two press conferences or briefings was that both sides expect something to happen. Pakistan has said that it has the right to respond to the attack, and they will do so at their own time and date. The Indian Foreign Secretary also said the same thing, that they have intelligence of Pakistan planning an attack. So one thing is clear, that what's been done is not over yet, and we're going to see something else happen as well. And yes, that's the latest.
Fuzzy, thank you so much. Fuzzy Mangi there with the very latest on what we're following very closely. Now, China and the U.S. have announced high-level trade talks which will happen in Switzerland later this week, led by the Chinese Vice Premier and the U.S. Treasury Secretary Scott Bessent. He's been calling the current tariffs unsustainable. Meanwhile, President Donald Trump says he would set tariff levels for trading partners.
We're going to sit down and we're going to put very fair numbers down, and we're going to say, here's what this country, what we want, and congratulations, we have a deal. And they'll either say, great, and they'll start shopping, or they'll say, not good, we're not going to do it. I said, that's okay, you don't have to shop.
Now, for more, let's bring in Roz Matheson, Bloomberg's EMEA news director. So, Roz, talk to us, good morning, first of all, but talk to us about how important these trade talks are, and are both sides softening?
Well, it's interesting to see that a conversation is actually happening. Just the fact they're going to meet is significant. And at that level of, the U.S. Treasury Secretary Scott Bessent, China Vice President He is going to be there. So this is a high-level conversation, and they're agreeing to meet in person. Expectations for anything tangible will be very, very low. This is not about getting a trade deal, as Scott Bessent said. This is about de-escalation. And so it's a kind of feeling out exercise to have these talks. They'll work out where their parameters are a bit. We're not expecting a massive announcement of a trade deal to come from it, or understandings around tariffs, but just getting in the room is a start. And you can see that that's why you get some relief in financial markets today as a result. So this is not about, again, a big announcement, but it's a bit by bit. So this is the first step. After this, at some point, do we get a phone call directly between the presidents of the US and China? Is that where some of this clarity really starts to come in? It was interesting also to see today China coming up with a raft of policy announcements on rates, dropping a bunch of rates, but also looking to push liquidity into the financial markets. And that's to show again that China is working to fortify its economy and to support its markets, and it has the ability to do so. And that's a bit of a signal also to the US going into these talks. So even though they want to have the conversation, that China is not going to move away from taking quite a hard line.
What about Rob's negotiations with other countries?
Well, it's interesting to see. Obviously, we had Donald Trump's comments overnight saying basically, we'll set some numbers for you and present them to you. And is that the extent of a negotiation? But we do know from our own reporting that US officials and UK officials are locked in very, very intense conversations to try and get towards some sort of framework understanding. That's for the UK to seek relief, obviously, from tariffs on autos, on steel. And also the UK is very worried, obviously, about pharmaceutical and now about the film industry in the UK as well. And so we know that there are conversations happening as we speak between those officials to try and get towards some sort of framework understanding. We also know, of course, that the new Canadian Prime Minister, Mark Carney, met yesterday with Donald Trump to have that kind of, again, setting of parameters, frameworks, understandings, conversations. I mean, there was no tangibles from that. Donald Trump didn't give ground on tariffs to Canada, but it's how are we going to have these conversations going forward? What are the boundaries going to be, and what are the red lines for each of this? So it's interesting to see that process happening across the board, be it Canada, China, or elsewhere.
Roz, thank you so much. Bloomberg's EMEA News Director, Roz Matheson. Now, Novo Nordisk, one of the big gainers in Europe this morning, despite trimming its forecast. That's as sales of the Danish pharmaceutical giant's blockbuster obesity and diabetes medicine struggle with competition from the U.S. Well, I'm delighted now to be joined by Karsten, Munk, Knudsen, the Chief Financial Officer of Novo Nordisk. Thank you so much, as always, sir, for joining us. So what portion of your sales do you think will be affected by Donald Trump's tariffs to branded pharmaceuticals produced in the EU, and how long will it take for you to reshuffle your manufacturing? Well, so first of all, at this point in time, then we don't know exactly how potential tariffs are going to play out. We have a significant footprint in the U.S. already. So in totality, we have more than 10,000 employees in the U.S. spread between manufacturing, R&D, and commercial. So let's see how it works out. But I would say out of total volumes, as a matter of fact, we're actually exporting more out of the U.S. than we're importing. And as a case in point, then the product we just submitted here in the first quarter called All-Sim Obesity, which we submitted to the FDA for potential launch in the U.S. early next year, that is produced in the U.S. by American employees to be sold in the U.S. So a purely U.S. to U.S. supply chain. So let's see how it works out. Sir, do you see actually rising demand for some of the contract manufacturing, for example, at your Catalan site in the U.S. from customers looking to bring more manufacturing to the U.S.? Well, so Novo Nordisk as a company, we are not in the contract manufacturing business. We acquired 3 fill finish sites with the intention to use them, of course, adhering to the historic CMO agreements. So we are not really having our ears to the ground on the CMO side. We are buying for some of our pipeline products, but our main principle is to produce for our own needs. Okay, will you seek more exclusive access, for example, deals like for Wegovy, like the one agreed with CVS last week? Are we going to see more of those kind of deals?
I would say our approach is really that we pursue open access in order for patients and prescribers to have free choice to choose the medication they believe serves their needs best. So we're not pursuing exclusive contracts and of course recognize that it's a PBM choice how they design their formularies, and then we're only happy that they decided to choose Wegovy for the CVS formulary based on the benefits of Wegovy. And then another part of the deal is that it actually provides access for Wegovy in the cash channel for patients to go to 9,000 CVS pharmacies to pick up Wegovy through a cash offering at $4.99.
What's the reason behind wholesaler destocking of Wegovy in the first quarter?
Well, I would say it's normal fluctuations where the wholesalers, they have certain algorithms, and the script numbers have been somewhat flattish in the first quarter, and I believe as a consequence, after coming out of a shortage around the turn of the year, then the algorithms are adjusting. So it's not a major change, to be honest.
Could I ask you how you see competition on prices actually affect market share in obesity this year?
Absolutely. So the key backdrop on obesity is that this is a market development strategy. So right now, if you take it in the US, then we're only looking at a few million patients being served by the industry in the US on branded pharmaceuticals for treatment of obesity, out of a total potential of 110 million. So this is a market built, and as a consequence, really not a price or market share competition at this point in time.
Sir, how long will it take for competition from compounding pharmacies in the U.S. market to actually, for example, stop when the FDA restriction on compounded versions goes into effect?
Well, so the FDA decision, which was reaffirmed by the court not too long ago, basically says that bulk compounding has to cease by May 22nd. So after that date, bulk compounding, basically copies of Wegovy or Ozempic for that matter, are illegal in the US marketplace. And of course, we intend to work with the regulators to enforce that so that unsafe, unlawful compounding will cease at that point in time.
But is compounding affecting you more, for example, than some of your rivals such as Lilly, and why is that?
Yeah, that is our assessment. There are not a lot of really good market data on compounding due to the nature of the industry, but we believe that compounding is significantly more on semaglutide compared to competition. I think there are a number of factors going into the why on that. One aspect is that our competitor got off the shortage list 3 months before we did. So compounding had to cease earlier, and then also we were first to market in the incretin obesity market in the US. So on that front, compounders would also start looking at our molecule before they looked at competition.
Karsten Knudsen, thank you so much for joining us. That was, of course, the Chief Financial Officer of Novo Nordisk. Now, the French environmental services company Veolia has agreed to buy the rest of Water Technologies and Solutions for $1.75 billion as part of a drive to expand in the U.S. Now, Veolia is seeking to boost its U.S. exposure as President Trump looks to shore up domestic industries. The company has also reported an increase in first quarter sales and profit and confirmed all financial growth targets for the year. Well, joining us now for an exclusive conversation is Estelle Brachlianoff, the Chief Executive of Veolia. As always, thank you so much for joining us. Could I ask you what actually, when you look at tariffs and some of the things that you're trying to gain in terms of market share in the U.S., how different will Veolia look like in 2, 3, 4 years?
I think it was a nice introduction you just did, because as you can imagine, to be announcing very good results because our demand is very strong. We've announced a lot of new contracts as well this morning. And to invest in the US, in the water tech, now Veolia stands out in many ways compared to the very uncertain world we live in. In the US and in the water tech, this was identified in the Green Up strategic plan as a priority because the demand is super high. what are we talking about here? We're talking about providing ultra-pure water to microelectronics, which is one of the reshoring consequence, because microelectronics needs ultra-pure water and water altogether, and we have a unique positioning here. Same goes with the micropollutant treatments, such as PFAS, which is a market which is growing very fast, and we are uniquely positioned with our Beyond PFAS offer to treat it. So we're talking here innovation, macro trend, and great positioning.
Well, I mean, and again, I know you've been reporting from strength to strength, another quarter of growth. When you look at the main segments and geographies around that growth, will they be the ones driving you in the future as well?
Yes, we have a lot of potential for growth in our booster of activities, which are actually boosting our growth, including notably outside Europe, US, the Middle East, and Australia. And in the US, we aim at doubling our size by the end of the decade. And it's interesting to see that whatever happened in terms of tariff or in terms of which administration is in Washington, this goal still stands. And why is that so? Again, demand for environmental security. Those two words are absolutely key for me. We provide security of supply for industries. We provide security in terms of health. And that's what drives our growth, whatever happens. Again, tariff, administration, legislation.
Do you see more competition from China?
Oh, there is a lot of competitors. I do feel that we are a leader of our industry by our innovation. We are the first patent depositor in Europe. Just to give you an example, in water tech, we have 11 R&D centers. So yes, there is a competition from companies across the globe, including Chinese one. But still, we'll still stand out, and we have quite a unique, again, positioning, not only in patent and everything, but in our ability to combine the different businesses we have, the waste, the water, and the energy. I mentioned the example of PFAS, which is a forever chemicals, which is very at the forefront of the Americans, worries about their daily life. We have a unique solution which helps us concentrate the pollution and then destroy it. And the destroying element goes with our hazardous waste business, where our, concentrating it goes with our water tech business. So combination makes us in a very unique position compared to any of our competitors, which are only in one segment. Mm-hmm. We are the only ones to be able to combine all those segments to offer unique offers to our customers. And that's why I've announced this morning a series of contracts for $700 million, notably a few in the US, precisely thanks to this combination.
Where do you see the main challenges for Veolia this year?
We all have challenges, but nothing which will prevent us from delivering our guidance and our results, which are growing quarter after quarter. Veolia is about resilient and growth. The challenge will be always to be as flexible and agile as we've been in the past. When something kind of slows down somewhere, we're moving to somewhere else, and being very international, 80% of the company being outside France, helps us to seize the opportunity and even at times to create opportunities and the demand for our service. So keep our agility would be probably my answer to your question.
Is that overall, when you look at, again, all of these, significant investments in the US, the trade war, everything that comes in between, do you think that your plan could change? I know it's very thoughtful and always longer term, but is there a lot more volatility? Are you looking, for example, for more acquisitions from where you are now?
So a few things. For me, a strategy, like the Green Up strategy plan, gives you the direction and the beacon, if you want. The way to get there always depends on the circumstances, as long as you keep the foundation and the priorities. We always identify priorities as US, again, Australia, Middle East, as well as the water tech activities and hazardous waste. I will keep those priorities. And of course, we are agile in seizing the opportunities as they arise, like the big investment we've announced this morning in water tech, and in particular in the US. Going forward, we keep the flexibility of being able to seize new opportunities. So we have the flexibility, the strong balance sheet, and the headroom needed to be able to go on delivering good results and creating value in the next few years. So we keep on moving and being agile.
Thank you so much, of course, as ever, Estelle Brachlianoff there, the Veolia chief executive, for giving us a little bit of her precious time. Now, we'll have plenty more to come. We have a lot more, of course, markets. We'll look at FOMC. This is Bloomberg. Well, let's bring you some corporate news out of the U.S. And chip maker AMD says U.S. restrictions on sales to China will cost $1.5 billion in revenue this year. Now, that warning clouded an otherwise upbeat outlook for the company, which is NVIDIA's closest rival in AI processors. Well, AMD's chief executive reiterated her projection that new chips debuting soon will help boost sales in the second half of the year. Now, Rivian says full-year deliveries will decline more sharply than it anticipated a month ago, citing the impact of tariffs. Now, the automaker says President Trump's trade policy risks worsening an existing slowdown in EV demand. However, the company still expects to achieve a modest full-year gross profit. And the secretive process of electing a new leader of the Catholic Church begins today. Now, these are live pictures as more than 100 cardinals gather at the Vatican's Sistine Chapel for what's known as a papal conclave and would not emerge until a successor to the Pope Francis is chosen. Bloomberg's Alex Morgan has more on what to expect.
Choosing a new pope. It's a tradition stretching back more than 7 centuries, shrouded in secrecy and taking place locked away from the outside world. Here's how it works. When a pope dies in office or takes the far rarer step of resigning, his successor is chosen through a process known as the papal conclave. More than 100 cardinals are called to the Vatican, where they cast ballots for a successor in the Sistine Chapel. They're not allowed any contact with the outside world until they reach an agreement. And that's a process that can last anywhere from days to weeks to years. And this is where the famous black and white smoke comes in. The results of each ballot are counted aloud. If no candidate secures the necessary 2/3 majority, then the ballots are burned and a chemical added which turns the smoke black. When finally the cardinals are in agreement, a chemical is added which turns the smoke white. That's a signal to the assembled crowds that a new pope has been chosen. The Dean of the Sacred College of Cardinals then asks the winner if he accepts his election. If he does, he chooses a papal name before appearing on the balcony of the Basilica of St. Peter's to bless the crowds and the rest of the world.
Well, coming up, we'll dive into the markets with Grace Peters from JPMorgan Private Bank. That's next, and this is Bloomberg. Good morning, everyone, and welcome to the Pulse. I'm Francine Lacqua here in London, and these are your top stories. Now, tensions escalate as India carries out retaliatory military strikes deep into Pakistani territory. Pakistan describes it as an act of war. Confirmation of the first trade talks between the U.S. and China and Switzerland this week lift optimism on Wall Street. Plus, the show must go on. Friedrich Merz begins his first foreign trip as German Chancellor after suffering a humiliating defeat in the Bundestag. So markets also welcoming the news that the U.S. and China are to begin trade talks at the same time. Beijing is ramping up efforts to help an economy caught in a second trade war with the U.S. Well, let's bring in our very own Valerie Teitel. So, Val, what's been the market reaction so far?
Quite jubilant to start the morning, Francine. S&P futures on those headlines rose above 1%. We are off those highs, but we're still in the green, up 0.6% for the S&P 500 futures. The dollar is also liking the story that the U.S. and China are going to be getting together to talk. We're 0.25% stronger on the Bloomberg dollar spot index. There also was a bit more risk on in the Asia session, and that was due to the fact we got a surprise policy announcement from the PBOC. They did end up cutting the RRR by 50 basis points and also announced some other measures to inject liquidity into the market. Now, Francine, you can almost read this sometimes as maybe something bearish because perhaps the PBOC is really trying to bolster the Chinese economy because they expect this trade war to be maybe more drawn out than the market thinks. So keep an eye on any new policy announcements coming out of China. It has been quite supportive for now. But that's the central bank action in Asia. We do also have the central bank in the U.S. Announcing a policy decision later tonight. The Fed decision is at 7 p.m. Press conference at 7:30. It is going to be a lot about the nuance in this decision. The Fed is wildly expected to hold interest rates. The market is currently pricing in 3 cuts from the Federal Reserve for the remainder of this year. The first cut not fully priced into July. It's going to be down to the press conference on whether Powell leans dovish or hawkish and possibly changes what's priced in.
Thank you so much. As always, Valerie Teitel there with the very latest on, of course, what we're expecting from the Fed and some of the other market moves. Now, we're joined by Grace Peters, Global Head of Investment Strategy at JPMorgan Private Bank. Grace, thank you. Look, it's quite exciting, actually. For the first time, we have two sides talking, China, the U.S., and I don't know how the market is pricing it. So they're kind of a little bit optimistic, but they're not sure of the outcome.
Yes, I mean, the market would love a win when it comes to trade talks, and the big one is obviously with China. So, I think there is a degree of optimism towards that outcome already priced in. We're obviously looking at an S&P that's only 3 or 4% from the highs, but this undoubtedly, I think, would be good news. Our sense is that the current status quo with China, that the tariff rates are prohibitively high. So negotiation is good. It's likely to come down to still high levels, but overall that will bring the US effective tax rate, we think, to more like mid-teens level, which is a situation where the US, where global GDP continue to grow, corporate earnings can continue to be strong, and therefore very much should be welcomed by the markets and risk assets more broadly. What I would just say is this is not just a US story. I mean, there are other things going on in the background. The big debate really is how much of the current US administration changes are going to be cyclical versus structural. And as part of that bigger debate, I think when we're thinking about which bits of the pullback and risk do we want to buy, geographic diversification is one of the key themes. So European equities as well as US equities, I think, should benefit from this view.
Grace, when you look at equities overall, is there going to be a lot of volatility? And so is your main kind of message, go forth, so don't be scared, but it will at some times kind of test your heart?
Yes, it's going to feel uncomfortable. I don't think you should be scared, nor should you be complacent. But I think investor positioning and investor sentiment is still pretty bearish. When we look at investor surveys across the market, the general mood is to still have that degree of caution. And that will be one of the elements, I think, that means that markets can keep moving higher. So we're in the process now of setting our price targets for next summer for over 12 months forward. And I think the S&P could easily, reach the highs that it saw in February, if not progress a little bit further to make new highs over that time horizon, and positioning is part of that.
Is that with how many Fed cuts, or do you leave that to one side whilst you
model equity? It's all in the mix. I mean, I don't think the Fed needs to cut this week. Today, I mean, the data is still pretty resilient when we think about the labour market. We expect 2 cuts this year, 2 more cuts next year. That takes you down to a terminal rate of about 3.5%. If growth is weaker, obviously they've got room to cut more, but I also think the Fed is a little bit constrained also by some of the inflation dynamics, particularly consumer inflation expectations. So the notion that growth is going to be positive, corporate earnings will be positive, the Fed will cut a bit, but not extensively so in the backdrop that we see, is where lands us to this notion of geographic diversification, still being pro-risk here, but in a intentionally diversified way.
What do I do with gold right now?
We still like it. So
you use it basically as a hedge, right? As the hedge par excellence.
It is. I think, look, there's a few different things we're trying to solve for. US overweight positions is one. So diversifying by geography and by currency is one of the elements. But also just broader geographic hedging, as you say. And there's definitely been a way over the last couple of years as to how gold is traded. And we think that those structural changes are likely to keep playing out. So we came into this year with a price target of gold of 3,500. We've just sort of broken through that now. So again, looking 12 months forward, north of 4,000, we think would be a new reasonable price target for gold, with key drivers being still emerging market central banks. When you look at EM positions versus DM central banks, there's quite a lot of room still for EM central banks to position closer to where the DM counterparts are. and also retail ETF buying, as well as in that backdrop, GDP being positive, demands for gold through tech and jewelry channels also being reasonably resilient.
And Grace, so do you buy more gold if there's, for example, we're trying to follow India, Pakistan right now. You could see other geopolitical kind of hotspots around the world.
Yes.
Do you go to gold immediately, or does that have implication for treasuries?
No, I think that there's a few different levers that we can pull to think about, if we are going through structural change, which we think we could be in the early innings of that, and sort of therefore the dollar overweights that have built up and the US equity overweights that have built up, that's where the intentional diversification comes in. Gold is one element of that. Volatility, Francine, to your comment before, yes, we think volatility is here to stay. So another element is trying to think which assets benefit from volatility, being higher, and that would be derivatives and equity structured notes in particular. Hedge funds also in that camp. And then the other component is really the inflation piece, and this does tie into fixed income and the balance of whether you're looking for downside growth protection with your income, that would be fixed income, or whether you're looking for upside inflation protection with income, which would lean more infrastructure. And I think both of those pieces can be very complementary in this world that we see going forwards.
Grace, we're also in the middle of the earnings season. I mean, I know it'll die down a little bit, but it's difficult to make sense. So you have certain sectors that have been doing okay, guidance, again, quite patchy, and that seems to be overriding everything.
Yeah, so I think, expectations are quite low coming into earnings season, in part because some of the GDP prints have come down, but also because everybody was just thinking, what are these statements going to be, and what can companies actually say at this point in time? And I think, on balance, corporates have offered a reasonably high degree of certainty around how they're rejigging their businesses and adapting to the environment that we see. So I think against low expectations, earnings season has delivered. The other thing that we think is interesting, post-earnings season is obviously share buybacks can start up again. And we do think that is quite a significant incremental buy in the market in the US, but also within the European large cap companies that, again, can just sort of help provide that floor to markets.
Great. How often do clients actually ask you about US exceptionalism?
A lot. It's a big conversation at the moment because it ties into that cyclical and structural conversation that obviously does have big implications for the portfolio. I think cyclically, we can say US growth is likely to dip because of higher tariffs, because of uncertainty, and we think US growth is still positive, but the delta between US growth and, say, European growth is likely to be smaller because at the same time, obviously, Europe has got its own, positive fiscal tailwind. The bigger question, and the time we're spending a lot of time with clients discussing, is what about the longer-term implications, whether that be for the economy, but also for portfolios, as I say, which have intentionally and unintentionally skewed overweight dollars, which, our long-term view is still that US growth, US earnings growth will be stronger than international counterparts. But, relative valuation still looks appealing elsewhere. And for clients, particularly that spend in euros or spend in sterling, i.e. not dollars, then I think that there's a little bit of mismatch perhaps that we're working through at times between assets and liabilities so that they can feel comfortable about their spending needs.
Grace, we also have Bank of England tomorrow. I mean, you could see exciting opportunities in the UK. How do you play that market?
Yes, I would say that our focus is more on Europe rather than the UK at the moment. I think that there are sectors in the UK that are interesting, particularly those linked to higher capex spending and some of the mining and the materials companies. But broadly, we're looking to Europe because there is, for the first time in a long time, a strong domestic story. That means you've got both a push and a pull when it comes to that region.
Okay, wonderful. As always, Grace, thank you so much for all of your insights. Grace Peters, Global Head of Investment Strategy at JPMorgan Private Bank. Now, Uber and Disney report today with a focus on how trade tensions could affect what are respectively the world's largest ride-sharing service and theme park operator. Well, Charlie Wells is here with an update. Charlie, good morning. So what's the outlook for Uber?
Good morning, Francine. So Uber is reporting in the context of quite a wild ride for its share price. You can see a significant dip late last year. Now, that was on concerns about robo-taxis, which I will get to in just a minute. But this year, you've seen a significant recovery upwards. Now, this is a movement you might not expect in the middle of a trade war, particularly with Uber so exposed on this auto front. But I want to bring in a little bit of a reason why from Mandeep Singh, an analyst at Bloomberg Intelligence. He talks about how tariffs could actually be good for Uber in that that if you get less new car ownership in the United States, that helps Uber lock in their supply advantage relative to its competitors. So that's a really interesting idea, potentially helping some of that share price movement upward as Uber reports later today. But we've also got to talk about this robo-taxi story. It's a shift where robo-taxis don't necessarily eat into Uber. These competitors don't necessarily hurt, but they actually help as Uber starts to develop partnerships, some that they have announced just in recent days with partners in the robo-taxi space across the globe. So we are expecting analysts to really focus in on how those partnerships have been going for Uber when they report later today.
Charlie, what are investors looking for at Disney?
Francine, Disney really has been under pressure in the market relative to its peers, especially Netflix and Comcast, the parent of NBC. Now, look, Disney is viewed by and large as more exposed on that trade front. They've got this diversified business. They've got experiences. They've got theme parks around the world, which are seen as more exposed given the fact that, these theme parks are across the globe. If we want to think about that experiences unit, that was responsible for 60% of profit last year at Disney. But in the event that we get heightened trade tensions, uncertainty, consumers pulling back, there's concern for that segment. So the number to look out for, $8.8 billion, that's the amount of revenue expected in the quarter that Disney will be reported on. A beat could help them, but a miss could really kind of feed into some of the negativity. We also have got to end on streaming. That is an important segment for Disney. They've kind of staked their future on that. We're expected to see growth, but slightly slower growth. So expect to see the company talk about this, about pricing power that they say they have, but investors razor focused on this unit.
Charlie, thanks so much. Charlie Wells there with the very latest on Uber and Disney. Coming up, the new German chancellor seeks to brush off the chaotic start to his leadership. We'll dig into the consequences of Friedrich Merz's humiliating first-round defeat in the Bundestag. That's next, and this is Bloomberg. Friedrich Merz travels to Paris and Warsaw today on his first foreign trip as German chancellor, still reeling from a humiliating setback in his initial confirmation vote that raised early questions about his leadership. Well, Bloomberg's Ollie Crook joins us now from Berlin. So, Ollie, the Chancellor Merz is now chancellor, but it's been a pretty messy start.
Yeah, I could say it's a pretty inauspicious start for the new Chancellor of Germany, Friedrich Merz, who basically failed where basically no Chancellor in modern history has managed to fail, which is the first possible stumbling block, basically getting the number of lawmakers in your own coalition to vote for you on day one, which we assumed was going to be a sort of a rubber stamp, a procedural measure. That is not how it turned out. He was turned down the first time. They had to take the vote back, created quite a bit of chaos here in Germany on the first day. And again, this was supposed to be, Francine, the end of sort of political gridlock, political disruption within Germany from that three-party coalition under Olaf Scholz that collapsed before the end of its term because they just fundamentally couldn't agree on things. You had a little bit of flavor of that once again for the incoming Chancellor Friedrich Merz. He did manage to get over the line in the end, and that is something that is obviously positive. It is welcomed from the sort of political institutions here within Germany, but it does cause some real questions about how effective he's going to be going forward and how quickly he will be able to move. For his part, what he said after being sworn in is that he just wants to govern without pomp and without superfluous shishi. He said to his colleagues who are joining in the federal government with him today when he's being sworn in that they must deliver now. So, Francine, you'll be relieved to hear there will be no superfluous shishi from the German government. Really what Friedrich Merz is saying is he wants to bring sobriety, he wants to bring competence, and he wants to bring speed in order to enact his agenda, something that they basically will have to do while you've had the AfD for the last couple of months saying that basically all these coalition governments we've had over the last couple of years are not effective to get anything done. Friedrich Merz needs to prove that wrong.
Yeah, it's always reassuring when there's no shishi. So Chancellor Merz meeting with Macron and Tusk today. What will be on the agenda?
Yeah, his first trip is to Paris, maybe the land of the shishi, where he's going to meet President Macron. We have to say that there was a pretty strained relationship historically with Olaf Scholz and Emmanuel Macron. That is something that Friedrich Merz wants to change. It is really sort of symbolic that France is the first destination. As you know, Francine, it's very important for there to be a strong Franco-German relationship to basically get anything done at the EU level. He then goes to Warsaw to meet Donald Tusk. And then on Thursday, or on Friday, I should say, he goes to Brussels. He's going to meet with Ursula von der Leyen. He's going to meet with the NATO Secretary General General Mark Rutte. And then next week is really his big opportunity to get in front of all of the European leaders within the broader European Committee. There is the European Political Community meeting on Friday in Albania and Tirana, where he will get to meet basically every single leader of Europe, which is absolutely crucial to start building those fundamental relationships. And we should say, Francine, this is really important. Despite all of the issues that Germany has domestically, Germany has really been kind of absent on the global stage. Olaf Scholz was not a sort of strong presence on the global stage. Friedrich Merz maybe can change that in a moment when there is this huge power vacuum left by the United States, sort of abandoning the multilateral order. You really need to have countries like France and Germany that step up. And we should say, Francine, despite the fact that this is a much more conservative CDU, we should say that Friedrich Merz is a very big believer in the European project and very pro-Europe.
Ollie, thanks so much. Oliver Crook there in Berlin. Now, for more on this, we're joined by Judy Dempsey, Senior Fellow at Carnegie Europe. Thank you so much for joining us. I mean, it does seem that we eventually got there with Friedrich Merz, but how weakened is he on day one?
Memories may prove to be very short, but he certainly came away rather weak, lacking credibility, and a great fear that he didn't get his coalition right behind him from the very, very start. It's down to him, really, because he's not a very popular person inside the Christian Democratic Union Party, nor indeed is the leader of the Social Democrats, Lars Klingbeil, who will take over as finance minister and deputy chancellor. So both leaders now will really have to pull the ranks really tight around and ensure that this coalition gets off to a very quick and successful start. But Merz certainly has a bit of a liability, and now he has to really hit the ground running.
Yeah, how much is this a liability for Europe as a whole? Again, if he had a day one that's messy, France is also maybe not the most stable partner right now. So what does it mean in terms of negotiations with the US, with Russia and others?
Merz's key challenge is to give Germany back its strong voice inside the European Union. And this was lacking under Olaf Scholz, the former Social Democrat Chancellor, and indeed it was lacking under Angela Merkel as well. So Merz really has a terrific chance and an opportunity to really push a German and a European agenda inside the whole of the EU. And as your colleague said, it requires really working very closely with Paris, but also Poland, but also the Netherlands, Spain. This is about making Europe stronger, but also with a big push by Germany. So in terms of stability, this is Merz's big goal, of course, to project stability inside Germany and also stability inside the European Union, because actually a strong Germany is absolutely needed given what's happening over the other side of the Atlantic.
Yeah, and I guess this is about trade, this is also about Ukraine, this is about negotiating with China. What should Europe's priority and Germany's priority be right now?
Well, Germany's priority is the EU's priority, getting a good deal with President Trump over the tariffs. The tariffs would be devastating if they really were implemented, even on a lower reduced level. It would really affect the German car industry, the chemicals industry, and the pharmaceuticals industry. And actually, this would go against Merz's agenda and goal of pushing the German economy out of its doldrums. He really has to show results on this in order to push back. The alternative for Germany is the far-right movement and push Germany back into the orbit of the EU. That's why the tariff issue is just so dangerous for Germany and indeed for the European Union.
Judy, when you look at, I guess, some of the things that we really need to focus on, I mean, foreign policy is right there at the forefront, as you've mentioned. Do we know what kind of relationship the Chancellor Merz has with Donald Trump personally, if any?
Well, Chancellor Merz is an Atlanticist, but being an Atlanticist these days is rather a challenge, to say the least. We will have to see if and when Merz does travel to Washington, if he gets an invitation from Donald Trump. And it must be said that the White House isn't particularly a big fan of Germany because of its huge trade surplus, because of its role in the EU, because of its very powerful automobile industry. So Merz will have to work very, very hard to get some kind of rapport, if that's the right word, with President Trump. On the other hand, Merz doesn't want to go begging to Washington. if he does go to Washington, he wants all the EU member states behind him. And what is very interesting at the moment is that the European Commission President Ursula von der Leyen, she hasn't actually had a proper tête-à-tête with President Trump yet. So we'll see how this is going to pan out over the coming weeks, not months, weeks. It's a sense of urgency. And the other foreign policy issue, of course, is defence spending in Ukraine. And now that the debt brake is finished, Merz is going to really push ahead to modernise the armed forces and really strengthen this kind of security umbrella for the European Union. This is going to be rather difficult to do.
I mean, I have to say, the defense policies from Germany were a real game changer for Europe that we had announced a couple of months ago. Will Chancellor Merz be able to really get on with it and push it through?
Well, he has to. Europe needs a strong security outlook. It needs some kind of defense mechanisms, and we have no idea how President Trump is going to deal with NATO. I mean, he's given lots of threats and the Europeans must spend more. The Europeans are spending more. But what is interesting now is that Chancellor Merz has money behind him to spend on defence, to spend on the infrastructure and to help Ukraine. One other thing which is very important for this government's foreign policy, this is the first time for such a long time that the foreign ministry will be headed by a Christian Democrat. Before that, it used to be the Social Democrats or the Greens, and the last coalition with the Greens running the foreign ministry and Chancellor Scholz in the Chancellery, it was loggerheads the whole time over Ukraine, over China, over human rights, you name it. Now, Merz has consolidated the kind of foreign policy in the foreign ministry and in the Chancellery, and this is actually very important for speaking with one voice from the government.
Judy, we're also watching very carefully what happens between India and Pakistan. Is there a worry that this really escalates? Yes. And of course, the European Union and Berlin, they're really wondering what kind of stance President Trump will take. The United States has very close relations with Pakistan and India, and both are very, very big military powers. And this is so dangerous now, what's happening, what it'll do for the stability of the region, what it will do for relations with Washington, what it'll do, how China will react to all of this. So escalation would be very, very dangerous. And one is hoping that the State Department or the White House will come in immediately and play some kind of diplomatic role which is urgently needed. I mean, does China have a role in this? In talking peace?
China has a role in all sorts of things, but I think if you look at China's role actually in Syria, they waited for such a long time. But these are big neighbours of China, and China must be very, very anxious to see how this has been played out. Remember, Xi goes to Moscow today, and we'll be there tomorrow for the end of the Second World War. And so maybe there'll be discussions there in Moscow. But these are really dangerous times, and we'll have to see the reactions of China.
Yeah. Judy, thank you so much. Judy Dempsey, they're a senior fellow at Carnegie Europe. Up next, Bloomberg Brief with Danny Berger, and this is Bloomberg.